You've probably heard the term Bidenomics thrown around a lot lately, right? But what does it actually mean once you get past all the political headlines? Well, today we're going to deconstruct it. We're looking at the policy, the projects, and importantly, the public's perception. Okay, let's just dive right in.
At its absolute core, the entire strategy is pretty much captured in this one quote. It's really signaling a fundamental shift away from what we've known for decades as trickle-down economics. The idea that if you give tax cuts and benefits to corporations and the wealthy, that prosperity will eventually trickle down to everyone else. This, well, as we're about to see, this is a very, very different game plan.
So to really get to the bottom of this, we're going to walk through 5 key areas. First, we'll nail down the core philosophy. Then we'll look at the actual laws that put it all into action. After that, we'll do a deep dive into the massive infrastructure spending, check the economic scorecard to see the results, and finally, try to figure out this puzzling disconnect between the data and how people are feeling. So first things first, what is the big idea here? What's the philosophy driving the administration's economic policy? Let's get a nice, clear definition. Essentially, the theory goes like this. If you make smart public investments in America, in its infrastructure, in its people, and you empower workers, you end up creating a stronger, more resilient economy from the ground up. It really puts the middle class front and center as the main engine for growth.
Okay, so you've got this big economic theory, but how do you actually turn that into reality? Well, you do it through legislation. So let's look at the specific laws that make up the toolkit for putting this whole philosophy into action.
There are 4 major laws that really form this toolkit, and each one has a totally different job. It all kicked off with the American Rescue Plan, which was for immediate pandemic relief. Then came the big one, the Infrastructure Act, for long-term investment in our roads and bridges. After that, the CHIPS Act, to make sure we secure vital supply chains like semiconductors. And finally, the Inflation Reduction Act, to tackle energy costs and climate change. When you put them all together, they really represent a massive, sweeping industrial strategy. Now, to really understand how this stuff works on the ground, we're going to zoom way in on one of those key pieces, the Bipartisan Infrastructure Investment and Jobs Act. This is where the dollars literally meet the dirt.
In just the first 2 years, a staggering $306 billion in funding has already been awarded for projects all across the country. And with competitive grants still rolling out, this is really just the beginning of what the president has called an infrastructure decade.
And this is the critical question, isn't it? When you're dealing with this much taxpayer money, you have to ask, is it being handed out fairly, or is it being used to reward political friends and allies? Now, check this out. This data from a Brookings analysis is really, really interesting. If you look at the table, you can see that Republican-leaning states make up about 42.6% of the population, and they've received 41.3% of the funding. Meanwhile, Democratic-leaning states, with 56.4% of the population, got 57.3%. I mean, those shares are incredibly close. It really suggests that politics hasn't been the main driver of where this competitive money is going. But, and this is a big but, the overall numbers don't tell the whole story. When you break it down on a per-person basis, you see some wild extremes. A state like Alaska, for example, has received almost $2,000 per person. And then you have a state like Florida, which has gotten just $38. This huge gap shows how other things like geography, how many people live there, and what specific projects are needed play a massive role in where all that money actually ends up.
Okay, so that was a deep dive into one major law. Let's pull the camera back now and look at the broader national economic performance. What's the data actually telling us?
Let's be honest, the biggest story, the one that hits every single one of our wallets, has been inflation. It surged all over the world and peaked here in the US at a staggering 9% in June of 2022. But as you can see on this timeline, it has since fallen, and fallen dramatically. For about the last year, it's been hovering right around that 3% mark. This whole roller coaster has been the #1 economic concern for most people, for sure. But here's the crazy part. While inflation was grabbing all the headlines, the rest of the economic report card looked remarkably strong. I mean, just look at this. The unemployment rate dropped to an average of 3.6%, a level we haven't seen consistently since 1969. Job growth was explosive, and GDP grew at its fastest rate in almost 4 decades. And here's the really crucial part. By 2023, wages finally started to grow faster than inflation, which means people's paychecks were actually going a little further again. So what you end up with is this tale of 2 economies, really. On the one hand, you have these historically strong job numbers and incredible growth. But on the other hand, you have the very real headwinds of that high inflation we saw, plus rising costs for materials and high interest rates that have really squeezed both consumers and businesses. And that brings us to our final and maybe most puzzling section, this great disconnect between all that economic data we just saw and how people actually feel about the economy. This is the central contradiction. So many of the key economic indicators are positive: record low unemployment, strong growth, rising wages. And yet, public approval of the economy just remains stubbornly low. So what's going on here?
This poll really puts that disconnect in sharp focus. A poll from March of 2024 found that nearly 2/3 of Americans thought the economy was not good. So why the gap? Well, one theory is that the sting of high prices on stuff you buy every day, like groceries and gas, just leaves a much stronger impression than abstract data like GDP. And while those huge infrastructure projects are starting, a lot of people just haven't felt their direct impact yet.
So it's pretty clear the story of Bidenomics is still being written. The policies are huge, the spending is historic, and the economic effects are, well, they're complicated. And while the short-term public feeling is mixed, the real answer might not be known for years. It leaves us with this final, much bigger question. With all these projects just now breaking ground, what will the lasting legacy of America's infrastructure decade truly be?